Well, it was another scary inflation print this morning, 8.5% from last year. How problematic is this for the economy?
Look, this report shows the impact of the war in Ukraine. We saw in very clear view the impact of the war and Putin's choices on the cost of energy in particular. 70% of that 1.2% monthly increase was a result of energy. And as you mentioned, that was an increase directly in the price of the pump. Now, the good news is that the president's taken decisive action on that front. And since the middle of March, we've seen oil prices and gas prices start to come down. We also did see some moderation in March in what is referred to as core inflation, taking out food and energy. But make no mistake, inflation is running uncomfortably high, and that's why the president is about to talk in Iowa about actions that he is taking and has made front and center that lowering costs, lowering the deficit, that's got to be our focus.
You can't really put it all on the war and Putin. I get that we've seen sharp spike in energy and food prices since then, but we're seeing rising prices everywhere, and particularly in housing with rents and shelter in places like apparel that have been rising for the last few months. That's much broader than just what we've seen as a result of the war.
Well, the very large increase in March was driven by a very large increase in energy prices and gas prices, and that is a direct result of Putin's invasion and Russian oil coming off the market. Again, 70% of that increase in March was driven exclusively by energy. At the same time, core inflation, that includes a lot of the categories that you just described, did moderate modestly from prior months. But to be very clear, inflation is too high, and we need to bring prices down. That's absolutely the case, and that's why you see this administration doing everything that it can to encourage Congress to move in ways that could lower costs and make things more affordable for American families and provide additional moderating impact on inflation, and also to work internationally to try to do things like bring down the cost of oil.
A lot of people do. Americans do, though, if we're playing the blame game, do look at President Biden. In fact, there's a new NBC News survey just out in March. Biden gets more credit or blame for inflation than any other factor. The pandemic, Russia, corporations. Americans say 38% of Americans say it's Biden. Only 6% say it's Russia, Ukraine. So, I mean, clearly there's a political issue here, Brian. I guess the economic question is, where would these inflation numbers be if the administration did not add $2 trillion a year ago to this economy, which was already looking very strong and starting to open up on the heels of COVID?
Well, a couple of points. First, there's been careful studies that have been done about the fiscal support last year, and the predominance of the evidence is that we generated very significant economic growth. We have very strong top-line economic growth, and we have very strong labor market outcomes, and that the principal driver of elevated inflation is what we're seeing around the world. We're seeing record inflation in Europe. We're seeing record inflation around the world because we are dealing with a unique global supply shock, and the war is compounding that as well. There's no question right now that what's going on in energy prices is a function of Russia and the war. That's economically speaking. Politically, this president is focused on actually delivering results, and that's what you see. He galvanized an international coalition over just the last couple of weeks to release reserves collectively from the collective stocks around the world. We've seen that have some moderating impact on the price of oil. Today, he's going to announce additional actions on what's known as E15 to allow additional ethanol into gas as well. Each of these steps is him taking action to do what he can to try to moderate prices and encouraging Congress to do the same.